All right, so let's go ahead and dive in. Thanks everyone for taking some time out of your busy schedule to join us today for surviving ransomware attacks, audits, and regulators for banks and credit unions. So what you see on your screen here, just the title slide. Also, we have a couple of Gartner logos, so I just want to make a quick point of that. The Gartner 2015 Cool Vendor, that was in 2015, Gartner named Infrascale a cool vendor in business continuity and disaster recovery. And then on the bottom right, you see the Gartner Visionary. That was their magic quadrant in disaster recovery as a service. And Infrascale was listed as a visionary there. So I put those reports in the handouts. So go ahead and grab those handouts. There's also a copy of the slides in the handouts for you today as well. Presenting today, we have Wayne Sadin and Ken Shaw. Wayne Sadin is a member of the Infrascale Advisory Board. He's been in financial services technology since 1979. And then also presenting is Ken Shaw, and he's the founder and CEO of Infrascale. He is an experienced engineer and entrepreneur in the disaster recovery industry. And then our agenda and just a couple of quick housekeeping announcements. First, we are recording this presentation. You will be able to see a copy of that at infrascale.com/webinars. I'll send that out to you guys. Also, the slides are available in the handouts. So just go to the handout section of the software today and you can grab a copy of these slides. Also, please join the conversation. You can follow us on Twitter at Infrascale. You can use the hashtags DRAAS and BDR today as well. And then today what we'll be covering in the agenda is first we're going to look at some of the pain points with ransomware, with audits, with regulators, specifically for banks and credit unions. We're also going to explain DRAAS, all of the benefits that it has for you. And then we're going to look at ransomware then and now to keep you from getting a ransomware attack, to keep you from preventing that. And then last is the Q&A. During the Q&A, we are going to have a prize giveaway. So make sure to ask lots of relevant and on-topic questions. That's all you need to do to be eligible for that giveaway. And we have a Kindle that we're giving away today for that. So now that we have all the housekeeping taken care of, I'm going to pass it over to Wayne and Ken. Take it away, guys.
Terrific. All right. Well, good morning, everybody, or good afternoon, depending on where you are. Wayne, it's great to have you. Over to you for the first part of the presentation.
All right. Thank you so much, Ken. I'm glad to be here talking with everybody. I'm going to talk about regulators. I'm going to talk about compliance, because while we are, most of us on the call, IT professionals in the financial services industry, compliance and regulators are a very big part of our job and a very important part of our job. I wonder if anybody got the irony of the title of this slide deck. They put ransomware, regulators, and auditors in the same sentence. So you've got to survive ransomware, auditors, and compliance. I just thought that looked a little funny, but they're all threats to our existence as financial service IT executives. So the regulators are a big part of our job, and we've got to deal with them. Even though the CIO is seen as a very important position, there are many other positions that CIOs have to deal with on a daily basis. So I call the CIO position, while many aspire to it, a position of remarkably little power. On the internal side of the company, you've got the CIO, who deals with the CFO, the Chief Marketing Officer, Chief Risk Officer, Chief Operations or Operating Officer, and the Head of Audit. And that whole group reports up to the CEO and up to the board ultimately. And we've got to keep them happy. In addition to the internal folks, as IT executives, we have a group of external requirements we've got to live by. And they're known as the regulators that are CAMELS and FFIEC. Next slide, Ken, thank you. So a couple of terms that should be familiar to most IT executives, and certainly risk executives, is the FFIEC, the Federal Financial Institutions Examination Council. And that is an industry group that was put together and has quasi-legal jurisdiction over us and sets rules and regulations that we all agree to operate by. And then, of course, the regulators use a process known as CAMELS that measures every financial institution's capital adequacy, assets, management, earnings, liquidity, and market sensitivity. And I will point out that we in IT live in the management capability, the M of CAMELS. I am going to mention one more thing that's not on the slide, and that is HR 5069. Some people may not have heard of that. That is a House of Representatives bill that's been presented. That is an extension of the Sarbanes-Oxley Act that adds IT to internal audit. So just like there would be an internal audit expert in financial, there'd be an audit expert in IT and IT risk. So we're going to be very, very interested from the board level on how IT is doing to manage disaster recovery, among other things. So let's focus on disaster recovery, which is a big part of that management capability. If you've been audited, if you've had the regulators come calling, you've had to explain your DR workflow, your process. And for those that haven't been through this, I'll say the first thing the auditors say is, show me your written plan. If you don't have a written plan, you fail outright. Step one. Step two, are you following the written plan? Step three is the written plan that you're following adequate to protect the institution? It sounds kind of weird, but the M in CAMELS is management. They're looking at how well we manage, which is to have a process and follow it. So our process normally is write a plan, copy the data, put it in storage, test regularly. Anybody here done a disaster recovery test? You probably failed in some part. Whether you tested part or the whole thing, whether it was surprise or planned. Something in the traditional disaster recovery world probably didn't work as expected. So then you look at what failed, you build a remediation plan, you rewrite the written DR plan, and the whole cycle starts again. And that's a very difficult process and requires a lot of DR infrastructure. So next we'll focus on the kinds of DR that we have to put in to meet our management objectives. So we start with a mirrored site. If you're processing credit card authorizations, some securities transactions, wire transfers, you may have a requirement of no downtime and no data loss, a recovery time objective of 0 or pretty close, and a recovery point objective, an RPO, of 0 data loss. So mirrored sites are very difficult, very expensive, very tricky, but sometimes necessary. Hot sites are the next step down. That's a recovery time objective, less than 4 hours, and still not looking to lose any data. A warm site gets much cheaper, but I can have between a quarter of a day and 3 days to get things restored, and I'm allowed to have some data loss. Maybe in-flight transactions have to be re-entered, maybe people have to reconcile some accounting entries, but that's allowable in the interest of saving money. And then we have a cold site, which is typically a building somewhere that used to be a warehouse, and may still be a warehouse, that you promise the regulators you'll be able to build in 3 days or so and put my really low priority applications. I will tell people who've never been through a disaster, if you have a real disaster, the stuff in the cold site becomes very, very irrelevant, because if you can have it down for 3 days in today's world, it's probably not a very important system. So there are trade-offs among these options. You can choose cost, or you can choose recovery time. So let's take a look at them in order. We start with a tape backup, right? I can copy my stuff off the tape. Pretty cheap, but if you've ever had to do a recovery, you might wind up with 200, 300, 400 tape volumes in a tower of Hanoi backup, and you could be spending 2 or 3 days restoring them to get your systems up. The next thing you might do is put an appliance on site. So now I've got my data copied to disks or solid state even, and it's recoverable very quickly, but it's recoverable there in the building. So I can survive a micro disaster. I lose my NAS or my SAN, but I can't survive a building or a regional disaster. Still more expensive, quicker, but not the right answer. Now we move into traditional data backup and recovery. We'll do site-to-site replication. So now we'll take an appliance or some disk and we'll put it somewhere else. Now we have the beginnings of being able to survive a regional or multi-building disaster because I've got my data somewhere else. But still, we're not doing DR. Up the trail now comes the cold site, very inexpensive. Once you've got the data, then you've got a warm site, then you've got a hot site. But look, this curve has stood, although the angle changed a little bit over the years, for 50 years. If you have to back something up and it's cheap, it's going to take forever to restore it. If you have to get it up in production quickly, it's going to cost a fortune. I'm here to tell you the cloud changes everything. Having a cloud backup means you don't have to make those same trade-offs that you had to make in the past. So let's talk now about disaster recovery yesterday and tomorrow. And I say that advisedly. Why don't I have today in there? Because if you look at how we're doing disaster recovery in 2016, for most of us, we're doing it the same way we did it in 1995. We have faster disks, we have better telephone lines, we have ways to move data, but essentially we're doing the same process. I have servers here, I have servers there. I have disks here, I have disks there. We try to mirror them as much as possible, but they get out of sync, they get out of control. And so what we're here to talk about is what is the future of disaster recovery, and I'm here to tell you it's the cloud. First question that everybody wants to know is, what do the regulators think of the cloud? I've heard that more times than anything else. The regulators won't let me, the auditors don't like it, it's not secure, it's not safe, blah, 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 blah. If you've been up on the FFIEC regs, last year they promulgated some new guidelines about the cloud. And they had these 6 key elements that said if you're going to outsource into the cloud, you should be watching these things. If you've been doing IT for more than a couple of weeks, you'll notice these are the same things we're supposed to be watching anyway. Whether we do IT in our building, whether we outsource to somebody, whether we co-locate, and now the cloud is covered by the same kind of common sense, rational business approach. But now we have the imprimatur of the FFIEC saying it's okay to run in the cloud. So we talk about the cloud, and a lot of times we're confused about what the cloud means. So let's talk about the different kinds of cloud. There are 2 basic kinds, private cloud and a public cloud, and then you have the ever popular hybrid cloud for people who can't make up their minds. A private cloud is the notion that I can build in my own site or in a colo site or in a managed service site the equivalent of what Microsoft, what Google, what Facebook, what IBM, what Amazon has built for $11 billion. In theory, having a private cloud means I have compliance, control, flexibility. It's mine. I get the control. But you know what, folks? You're giving up a tremendous amount of scalability. You're giving up a tremendous amount, quite frankly, of cost. Because trying to duplicate on a small scale what's done at hyperscale, which is what the public cloud vendors do, is a fool's errand. Unless you are maybe the biggest couple of banks in the world, biggest couple of insurance companies, you can't come close to the scale economies of these cloud providers. So we talk about the public cloud. I think the pros truly outweigh the cons. And that would be Infrascales or the others mentioned up there. People who are in the cloud business as a business. So we have scalability. If you want to spin up a server or 100 or 1,000 because you've had a disaster, end of month, our marketing campaign's running well. My favorite is you're doing an acquisition and all of a sudden I need a lot of temporary capacity. It's so easy to spin it up in the cloud. I don't have to buy anything. Once I'm connected to the network, the cloud resources are available to me by the drink. And depending on your cloud provider, you'll sign an annual or a monthly or a weekly or even by the minute cloud contract. So all of a sudden your costs become much more understandable and much more granular. You get better security. Look, the cloud vendors have certified on FedRAMP, they've certified PCI, they've certified on HIPAA. Even the CIA runs data on a public cloud, a special area of a public cloud, high security, but those are available to us. So the idea that security is not there in the cloud is scare tactics, FUD. And reliability. They're running hundreds of millions, billions maybe of servers, the number's proprietary, in multiple data centers in multiple regions of the country and multiple countries of the world. The cons of a public cloud is you give up something. It's not your stuff anymore. So you've got to put up with their speed. You've got to put up with their data sovereignty. If you work in the US, you don't have that issue very much. If you work globally, you have issues with, well, Singapore, the EU countries have different rules than the United States. Privacy issues in the US versus privacy issues in the UK and even Canada. So where is my data housed becomes an issue, and that's seen as a con. In fact, it's not. You can put the data wherever you want. Just got to put that in your contract. And so you're giving up control, and in theory, there are cloud outages that might bite you. We all have outages, even the public cloud vendors, but they have lots of resiliency, which is part of our disaster recovery plan. So let's take a look to summarize disaster recovery yesterday versus today versus tomorrow. We had a choice. And this is a picture of a computer, probably a little older than me, but the choice was to run the traditional data recovery backup DR environment. It was slow, it was expensive, and required a lot of hardware. Like if I'm building a hot site, in theory, I'm duplicating my environment. If I'm building a warm site, I've got some fraction of my equipment sitting idle. Why would I want to buy all this equipment and keep it idle? The DR plan of tomorrow is fast, it's affordable, and it's cloud intensive. And that's what gives it the magic. So specifically to the financial services world, banks, credit unions, mortgage companies, insurance companies, there are some benefits. You can meet the needs when crisis strikes. I can move my work into the cloud, into the DR environment very quickly and easily. What you'll see when Ken presents is that having everything in one set of dashboards means I can easily meet my compliance audits and exams. If the regulators and auditors walk in and say, show me your DR plan, you say, here's the written plan, and here's a dashboard and set of reports that shows me that I'm following that plan and that it's working in real time. Everything's being backed up. All the servers are ready to be run. I can show you the test results. Everything's right there. That makes the auditors happy, and you get a better CAMELS score. It makes the auditors happy, and the external auditors may not have to spend as much auditing your internal people because they get a feeling that you know what you're doing. And that cuts our audit costs, which is not a benefit in IT, but a benefit to the institution. Your recovery speed. You don't have to trade off hot site, warm site cost. You can recover things quickly. With the benefits of the cloud, as long as the branch offices are connected to the internet, I can restore multiple branch offices. I can have lots of them up at the same time. Of course, I can pay as I go. I'm not having to buy capital equipment based on my projected growth. That generally leads to cost savings. I'm very flexible. I can deploy a little bit. I can deploy a lot. If you're doing an M&A, I can put them in the cloud and leave me on the traditional environment if I'm migrated. I can put me in the cloud, leave them in the traditional environment. So you get a lot of flexibility. And because I've got an appliance on site with Infrascale's techniques, and I've got a cloud behind me, I can quickly recover from micro disasters. Something happened in the data center, and macro disasters. Something happened in the building or the community or the city or whatever. I live in Houston, Texas, so I worry about hurricanes in the summer. Having a cloud-based DR strategy means that's not an issue. And for those of you doing acquisitions, one of the biggest problems we have, right, is your institution goes out and buys somebody, and then you find out. We hope to find out ahead of time, but sometimes we don't. And then it becomes a scramble. We have 90 days to onboard these folks. They have dissimilar systems. They have dissimilar infrastructure. They have dissimilar disaster recovery plan. But in 90 days, they're yours to worry about. So that's something that I think is overlooked, and having a backup and DR strategy that's flexible, expandable, scalable means we can recover from the joys of an acquisition in the IT world. So it's not all peaches and cream. We've got to be looking at the disaster recovery vendors and saying, what are the questions to ask? So here are some questions that I think you need to ask. How is the data encrypted, both in transit and at rest? If your data is not encrypted end-to-end in your own shop, can I say this? Shame on you. If your data is not encrypted between you and the DR vendor, and then encrypted at the DR vendor site, shame on you again. Can I easily test what I'm doing? Can I set up a disaster test of this app, of this server, of this SAN, and run them without having to build a scaffolding and a framework and all that? Can you look in one central place and see how things are going? I can't emphasize enough how important it is from the IT executive or the auditor or regulator to have a feeling of confidence when you look at the dashboard and say everything's green. It's not, let me show you 14 reports run on 14 different days. Can it scale? If you've got a disaster site that you're renting, what happens when you grow? Will they be able to grow with you in the cloud? How long does it take? If you can't fail over a critical application quickly, what's the point? Where are the virtual machines virtualized? Is it on a secondary appliance or in the cloud? You want to understand a little bit of this because the cloud's not magic. You have to understand the pros and cons of different approaches, but ask the vendor that. And lastly, and I think it gets overlooked in IT, but certainly is important to audit, is there an audit log? Can somebody look and say, what happened? When did it happen? Has it been recovered? And why are we showing a green on the dashboard without the supporting documents and work papers? So when you're looking at DRAAS vendors, they're not created equal, and you've got to be looking at these important points. And now I think I'll turn it over to Ken, who will kind of help answer some of these questions and reassure people that this is real, that it works, and that it can be an improvement to what you've been doing for the last 50 years.
Terrific, thanks Wayne, and that was a wonderful overview of the considerations that are specific to banks and credit unions as they evaluate using the cloud, for BDR. What I'd like to talk about now is, it was in the title for today's webinar, but is frankly, a relatively new threat and a big threat, and a threat that is particularly targeting financial institutions, and that is ransomware. And so BDR has a very important part to play in the battle against ransomware, and this is a topic that's only getting more and more serious as time goes on. And so I'm sure many of you on the line have experienced ransomware in your business, and in fact we'll ask a poll about that down the line. But the stories that I hear day in, day out about companies who've been affected are just sort of very scary. And so just a small definition here for those of you who aren't familiar with ransomware, it's sort of what it sounds like. It's a malicious type of computer program that basically steals your data, right? And encrypts it and locks it away unless you pay the ransom. Quite nefarious. And if we look at the numbers, it's pretty scary. There were 2,900 different types of ransomware detected in the first quarter of this year, just in the first quarter. And 72% of ransomware victims were unable to access their data for 2 days. Now, if you're, sort of a home user and that's Granny May's photos of sort of the bingo tournament, that's one thing. But if on the other hand you're a bank or a credit union and that's your core database and therefore your ATMs aren't working and you can't process financial transactions, that's a fundamentally different thing. And as Wayne was talking earlier, you've got serious regulatory frameworks that you would be in breach of, and the liability is substantial, not just for the organization you work for, but for you individually. And so that really explains why this next statistic, that $209 million were paid out in ransoms in the first 3 months of 2016. People are just paying up because it's easier than putting in place the proper IT products and protocols that will enable you to respond quickly to a ransomware attack. And 34% of SMBs fell prey to phishing, but I always prefer to actually get live data from our audience. So we're going to do our first poll here, and the first poll is simple. Just where are you when it comes to ransomware? Have you been affected? No, you haven't been affected, and then of course the most confident position, you haven't been affected and you don't think you will be. So reach forward and vote. And we'll give that here just a couple of seconds and get some audience participation. All right, we don't seem to have a lot of people voting just yet, but as it is, we've got so our current audience, we've got most people saying that they haven't experienced this type of infection. Well, the scary thing there is that even if you haven't experienced ransomware, there's a good chance that you will. And so ransomware has been evolving, and frankly, it's not a new concept. It's been around since the late 80s, but recent developments in encryption and the promulgation of high-powered, multi-threaded processors on desktop computers means that it's actually ransomware can now go a lot faster, so it can actually encrypt your computer and lock away your files from you far more efficiently, right? And so generally speaking, the way this works is this code will get onto your computer, and then there's different streams that do different things, but the basic concept is that it's going to go through your files and encrypt your files one by one and do it with a key that only the the sort of kidnappers in this particular case, the data kidnappers, have that key. And then you're going to get sort of a pop-up on your computer, or you might get some other sort of notification that alerts you to the fact that, hey, all of your files have been encrypted, or maybe not all of them, maybe just some key databases, right? The bad guys are getting smarter, so they're starting to do things like they'll just go after specific files or specific data types because they know that they're more valuable. And then you'll have a period of time in which you've got to pay the ransom. Typically, they'll ask you to pay that in Bitcoin, which is a form of digital currency. And one of the other very sort of concerning trends here is that the ransomware attackers have started to target businesses, and they've started to be careful about which businesses they target. So because there is such a sort of propensity to pay the ransom, you know, we, the world, are encouraging these guys to continue doing what they're doing and even escalate what they're doing, right? So if you think about hacking over the last 20 years, if you set aside sort of the high-end corporate espionage or the role of state actors, most hacking really boils down to vandalism. It's the equivalent of a teenage kid, you know, tagging a wall with spray paint. Most hacking doesn't actually get the hacker money. There isn't a financial incentive. It's usually about showing off skill and sort of getting respect in a community. All of a sudden that's changed. All of a sudden there is a massive economic motive for this sort of digital crime, and it's created this massive economy. I mean, we just saw $206 million paid out in just a quarter. So we've got this billion-dollar industry that has emerged out of nowhere, which is funneling, you know, substantial monies to these digital vandals, right? And because there's so much money at stake, toolkits have developed. So it's actually relatively easy to become somebody who's actually perpetrating these ransomware attacks, all of which is fairly terrifying. So the guys who are doing this, more and more and more, have been targeting businesses. Initially, they were targeting consumers and home users. And among businesses, they're more and more they're targeting banks and financial institutions, because banks and financial institutions will pay, they have the funds, and they're in such a mission-critical line of work that they generally sort of can't dilly-dally when they've been attacked. Hospitals is another sector where we're seeing a lot of attacks. I was sitting in the boardroom of a bank about a month ago in New York City, and they were telling me how, you know, there was an attack and the ransom was $50,000 and they paid it because they weren't confident that their BDR system would allow them to roll back, and they had to resume operations. So this is a whole new frontier in our fight against, you know, bad actors on the internet, and when it comes to security, with a major economic incentive. And because of those things, I predict it is only getting worse. So even if you haven't been a subject of a ransomware attack at this point, I mean, great for you, but you've got to learn about this, got to take some precautions, put some defenses in place, because all of the smart people in the industry are saying that this trend is only going to accelerate from here. So let's walk through what you should do if you do in fact get infected by ransomware. And this, of course, is, I mean, generally, in fact, I'm going to go to the next slide. Generally speaking, you have two options, okay? One is pay the ransom, and the other is restore the systems. Now, the FBI's position on this is that if you're attacked by ransomware, you should immediately notify your FBI field office, and that you shouldn't pay the ransom because it encourages the cyber criminals. However, they acknowledge that most businesses do pay the ransom, because your only other option is to restore from a backup, right? You've got to be able to go back to the point before you're infected, go back to the day before, turn back time, and resume your systems to then. Now, unfortunately, your average user just doesn't have the proper BDR infrastructure to be able to roll back to an arbitrary point in time, right? And so most folks cannot roll back to, say, last Tuesday specifically, and to do so quickly, and therefore paying the ransom becomes, you know, an attractive option. One of the other problems that folks have is that even if you've got a good backup system, and even if theoretically you can recover back to last Tuesday, there's a real cost that comes to the time involved in doing so. As we all know, recovering from a backup takes quite a substantial amount of time, and while we're doing that, we're down, and every minute counts, right? And so this is where we're going to start to talk about the differences between backup and DRAAS, or DRAAS, DR as a service. Because it's all about that recovery time and how quick how quickly can we get back up and running? And if we think about backup, at the end of the day, backup is a fancy copy, right? So we've got our computer systems and we've got our backup server in place, and it's doing a copy of data out to some storage, right? And when I said a fancy copy, I mean, there's all sorts of things going on in there. There's probably some indexing and some compression and some deduplication and some encryption, but it's a copy. And so when then disaster hits, we go and do a restore, which is the inverse, okay? It's, again, a fancy copy. So, you know, we're going to copy that data out over a wire from whatever storage medium it's on, whether it's the cloud or tape or disk, and we're going to rehydrate and decrypt and decompress, but at the end of the day, we are moving bits and bytes over a wire, and then we've got to reconfigure some new computing systems and then boot our infrastructure. So the really long sort of pole in the tent is the copy operation of the recovery itself. Reconfiguring your systems can be relatively quick. But this is why backup and recovery technology, frankly, is lousy for disaster recovery, because in the context of a disaster, as we said, every minute counts. And financial institutions are actually really good at quantifying this and knowing, you know, what a minute or an hour of downtime can actually cost you. So if we compare that backup and recovery paradigm to the DRAAS paradigm, it looks a bit like this. The protection side of things is the same. Okay, we're snapshotting systems, we're protecting systems, and again, that's still a fancy copy. The difference comes in when the disaster occurs. So when the disaster occurs, this slide actually has the word copy in it. It should have a big cross through it. The graphic hasn't quite come through. The point is that we do not need to copy, okay, at the point of recovery, because what DRAAS does and what Infrascale does is we will boot the infrastructure and boot the computers right on the storage, right? And what that allows us to do is to guarantee that we'll bring back running systems within 15 minutes. This is another big distinction between backup and DRAAS. In backup land, what you get back is data. Okay, you're getting back a file or a folder or a disk or a database, but it's data. With DRAAS and with Infrascale, what you're getting back is a running computer, or even better yet, a network, a group of running computers, and that's incredibly powerful. And so, you know, probably most of us on the line, I'm sure, you know, Wayne's got a million stories. I mean, when we were all young IT punks, it was our job to rotate the tapes, or we were the guy on call, right? And so it always happens at 2 a.m. in the morning, but the call comes at 2 a.m. in the morning on a Saturday that the servers are down and you've got to do something about it. Well, up until recently, what that meant was you'd get out of bed, put your boots on, get in your car, drive to a data center, rack and stack some equipment and start this really long copy job to sort of restore data out, reconfigure things and get it going. And that could take you days, right? Imagine a world where instead of that, you roll over, grab your iPad off your nightstand, find the data center, log into Infrascale, find the data center that's been impacted and hit boot. And 15 minutes later, all 50 servers are back up and running and inter-networked. And then you can, you know, sort of send an email out saying, guys, we're good, and go back to sleep. That literally is the use case with Infrascale, and that literally is our promise, that we will bring you back up and running within 15 minutes or less, guaranteed. And we won't just give you back your data, we'll give you back your running data center, right? And so here it is sort of animated out, but your end users, they hit a problem, you push the button. It's actually a 4-step wizard, so it's not one button, it's 4 steps, and then your users can reconnect and continue working. Now, why is that so powerful in the context of ransomware? Well, the answer is that with ransomware, you've got a malicious actor who is actively working to stop you from running your systems. And with DRAAS, you can just roll back, right? You can roll back to yesterday or the day before. And so, you know, if you know you get hit by ransomware last Tuesday, fine, you roll back to last Monday, right? Now, people, you know, the obvious question then is, well, how do you know when you're infected, Ken? And we actually provide tools that help you do this. So we give you, we have this system called anomaly detection, which will help identify the day or the period over which you were actually infected by ransomware. And then, of course, using that rollback system that I was just talking about, you can, you know, turn back time in the immortal words of Cher. You can turn back time to, you know, the day before. as it were. And so that is our on-demand failover system. It's particularly relevant to credit unions and banks, and the ransomware threat has made BDR more important than it ever has been. And so I'm just going to tell you a little bit about Infrascale in the next few slides, but Wayne, do you have anything to add there, or any sort of comments or color commentary you'd want to layer into what I just said?
Well, the only thing I'll say, Ken, is we all have the stories. We all have the stories about the 150 tapes that have to be restored, and it's going to take 6 days. We all have the stories, if we've worked in IT, about the critical deadlines missed. And I will only say that if you've ever tried to run a real disaster test, the results have been abysmal. And I don't care how much money you've spent. I've worked in institutions with several $100 billion in assets, and our tests were still Keystone Cops until we worked and worked and worked and worked at them. And we've been doing it the same way for so many years. And finally, we have a technology and a process to change the paradigm.
Yeah, and look, the timing couldn't be better, because historically it's been, and sort of I'm going a bit off script right now, but this is an interesting conversation. You know, historically the threat to our data infrastructure has either been like incompetence, right, or acts of God, right? It's Hurricane Sandy or Katrina, or it's some, you know, it's some intern who did something wrong. We haven't generally been the target of directed threats that are designed to take us down. There are certain institutions that are, but most of us don't work in those sorts of institutions, right? So we haven't had actual real-life enemies out there plotting to take our systems hostage before. Do you agree with that observation, Wayne?
Yeah, Ken, I do want to say, though, that when people think plotting to take us down, that's really not what the ransomware folks do. They cast a wide net looking for a hole, and then they just hit somebody. So they might have brought up a huge number of IP addresses, and they happen to get you because you have the weaker systems security than other people. It's not like somebody thinks of, I'm going to get you. They think, I'm going to get somebody today.
Yeah, I guess the one nuance to that is that they are now becoming far more directed in terms of the industry, right? So they will at least say, okay, I'm going to go after banks and hospitals. Mm-hmm. So you're right, it's not sort of going after Wayne Sadin, but it is still, I think, more of a threat than we've faced before, because it used to be purely random, right? It used to just be script kiddies or whatever doing port scanning. Yeah. And it was a threat, but it wasn't, there was no economic incentive, right? These guys weren't trying to make a living out of it. Now, all of a sudden, we've got people who have a true economic incentive and are targeting us by industry, which I find pretty scary.
Yeah, it's a very different environment. I've worked for companies, as Ken said, there are companies and institutions of government that are targeted. That's what other countries do. But working in a community bank or a credit union or a mortgage company, I was never worried that somebody was after me beyond the normal script kiddie hacker that takes over my computer and makes it play songs. That was annoying. We go clean off the CEO's machine, but it didn't put us out of business. And these kind of threats can literally be extinction events for companies, even more than a hurricane, a tornado. Look, if you have a hurricane, it hits the region. Everybody's affected. So people are a little bit willing to cut you some slack. When you are the target and nobody else, people are a lot harsher in their criticism, whether it's regulators, whether it's the press, whether it's your customers. They're going to see you as being some sort of incompetent if you were the one targeted, even though they're targeting our industry and happen to catch you that day. So the reputation risk of this sort of failure, once it's disclosed, and it's certainly disclosed to regulators at least, can be awful, more so than a traditional disaster.
Yeah. And so let me just tell you in the audience a little bit about us, Infrascale. Generally speaking, we are a backup and disaster recovery company. We're laser focused on delivering DR as a service, or DRAAS, through the cloud. As Carla mentioned earlier, we're the Gartner Cool Vendor for business continuity. We were recently named by Gartner as a visionary. We have 1 million devices being protected. And why do we do what we do? We frankly believe that every company has the right to keep their data safe and their operations up. We believe that the computing industry has been pretty crummy at building solutions that make this so, right? We've had massive advances in the way we can use computers to digitize our lives and to enhance our productivity, everything from recording music digitally to making movies digitally. But we've had very little advances when it comes to data resiliency and ensuring operational uptime. And so our mission is to eradicate downtime. We equip every company with the ability to recover from any disaster and to do so quickly and affordably. We do this over a broad variety of systems, so whether or not you're concerned with mobile devices, desktops and laptops, physical servers or virtual servers, we support it across that server infrastructure. We're supporting everything from Windows and Unix and Linux through to VMware and Hyper-V. And of course, we're not just providing the push-button failover and DR capability, we also provide backup and archiving functionality. Wayne talked earlier about the different types of cloud, and on that front we're quite flexible. We support private cloud and public cloud configurations, so if you already have your own data center, you can run our technology in-house. And then of course we have our own cloud solution that we can offer to you, so if you're looking for a turnkey solution, we can provide it. Security is of course vital to what we do, and so just as the hackers are using encryption to hurt you with ransomware, we use encryption to protect you. So the way our system works is it leverages a pattern called double-blind encryption. What this means is data is encrypted before it leaves your office with a key that only you have, and it comes over the wire to us and we encrypt it again with a key that only we have. So the data is twice encrypted. Now what this means is that if they break into your system or break into my system, it's still garbage, right? They need both of our keys. If Sony had been using double-blind encryption, the Sony hack wouldn't have happened. If the Office of Personnel Management, if OPM had been using double-blind encryption, then that data breach wouldn't have happened. And so you'll find many security elements sort of built in throughout our solution, whether it's the encryption we use, whether it's the anomaly detection that lets us help you detect ransomware, or whether it's some of our features like Find My Device and Wipe My Device, which we also provide. We try and make our pricing very simple, so we just charge based on data volume. So it's very, very simple. It's $149 per month per terabyte of data to protect. And if you're interested in learning more about our solution, of course, we can have somebody contact you. So what makes Infrascale different? Most backup and disaster recovery solutions, particularly those designed for regulated industries like fin services and banks, are too expensive, they require too many IT resources, and they're just complex and they've got compatibility problems. Well, Infrascale breaks through this. We are 80% cheaper than SunGard and IBM. It is push-button simple. My story about rolling over in bed, grabbing the iPad and booting, it wasn't an exaggeration. The only fib I told is I said push one button. It's actually a 4-step wizard. So you run through a 4-step wizard and you can bring back your entire network in 15 minutes. And because of the support coverage I talked about a couple of minutes ago, this will work on just about all the infrastructure you've got, right? So you've got one vendor to trust, one person to call, and really that's our mission in life, is helping you to eradicate downtime in your environment, whether that's caused by an act of God, incompetence, or the ransomware threat that we've spent most of today talking about. So we're going to do Q&A now, and remember we are giving away that prize, and I've actually forgotten what it is. I'm not sure, Wayne or Carla, if you guys, what are we giving away today?
The prize is going to be a Kindle.
Giving away a Kindle. All right, folks, so do ask some questions. We don't have any questions on the line yet, but so the way this works is the person who asks the most on-topic question gets the Kindle. Pretty simple rules. And well, I guess alongside the Q&A session, we're going to launch our last poll, which is just a simple question of whether or not you'd be interested in learning more from us. Let us know. And Wayne and I are here to take your questions, whether it's about ransomware, whether it's about the IT and regulatory frameworks that are subject, to the fin services industry, or BDR, or frankly any topic. Feel free to ask a question. All right, there's one question here from Rex, and Rex would like to know, how is our solution different to Datto, Barracuda, and ArcServe? Oh, that's a broad question, Rex. Okay, let's take it one at a time. So, Datto's solution is aimed, generally speaking, at Windows-heavy physical networks. So they don't do laptops, they don't back up laptops, etc. So they really focus on sort of physical servers and mainly Windows, generally for small, homogeneous environments. And they're very good in that. VMware clusters or Linux or frankly anything outside of that box, Datto starts to struggle. Sort of a strong solution for the mid-market that works across all of the major platforms out there. Barracuda, frankly, their product's not very good. The Datto product is superior to the Barracuda product. The Barracuda product is quite limited. Really more just about backup than DR, frankly. So, for example, the idea of being able to cloud boot a network of servers, the way I was talking about, that's not the sort of thing that they do. But if you're looking to just sort of do some simple backup and archiving, then the Barracuda solution can be good for that. Arc serves a different kettle of fish. Arc serves a solid product. They, of course, have their history in file and folder backup and have recently moved into image-based backup, but they're still very much an on-prem client server behind the firewall kind of a solution, rather than being cloud or rather than being DRAAS. But there's some good people. So that's sort of how I think about those three companies. Okay, so waiting for some more questions on the lines. Don't be shy, guys. And in the meantime, let me ask Wayne a question. So Wayne, you know, in your sort of practice, both as a professional and as a consultant, what sort of, but did you come across other sort of directed attacks or hacking attacks, you know, in your practice, and was at least preparing for that sort of breach and that sort of an issue part of the framework you would put in place, you know, when you were a CIO?
Well, as a CIO, I've worked in several what are known as critical infrastructure industries, financial services, the traditional banks. I worked for an armored car company. I worked for a utility, an energy company. And in all of those cases, we had to work with the regulators and build scenario plans, regional and even national, that worried about lots of failure points. We worried about biological attacks. We worried about large-scale power grid outages, the kind of things that really scare people but have to be looked at. Ransomware was not included in that because it tends to be a targeted attack. But lots of people are looked at, certainly larger institutions, by the regulatory infrastructure of the United States as being part of the critical infrastructure that keeps the country running. So if you're one of those institutions, you know what I'm talking about. You're in Critical Infrastructure Protection Program, and you are targeted by the regulator to have especially good defense. And Ken, I think this I mentioned it earlier, HR 5069, if enacted, means boards of directors are going to be on the hook personally, like they are in Sarbanes-Oxley for audit problems, the things that brought Enron down and WorldCom down. Board members are going to find themselves on the hook for disaster recovery failures. So if you're an IT professional in executive management, you need to go look this law up, and if it becomes the law, you're going to have a lot more conversations with your board of directors on, show me, prove to me that what we've got really works.
And I think we might have just lost Wayne's audio. Carla, can you still hear me?
I'm still here.
Yep, I can still hear you guys.
Wayne, okay. Okay, great. Good. Okay, yeah. I mean, when you raise an interesting point, I mean, and frankly, the level of board interest right now in cybersecurity threats generally, and you know, the new ransomware threat in particular, is very high. I know you're active with the National Association of Company Directors, and so maybe you can share some insight on that. But certainly from where I sit, I see a lot of interest in cybersecurity threats to the company and the way that intersects with the boardroom.
Yeah, well, the question is coming now on what's known as derivative lawsuits. Target, for example, the question became, what did the board know, and should the board have known more and taken more action? You've seen it in the case of Anthem, the healthcare company, of Target, the retailer. Boards are starting to be targeted by activist lawyers and saying if the board didn't know this stuff, they are personally liable. And I'll tell you what, having served on boards, the notion of personal liability, especially not protected by your D&O insurance, is a very scary thought. And so board members are taking an interest even today in the derivative lawsuit environment, and the regulators are saying left and right. SEC, one of the commissioners last year talked about cybersecurity as being something the SEC was going to be looking at the board level. This House of Representatives bill is another response. We're going to see something like this. And so board members are starting to care. Unfortunately, most board members have no clue what cybersecurity means. And so I'll say this as something that's presented to many boards. If you can show them a clear picture in simple words, I got it covered. Here's why. Here's my proof. Here's my test. They will hug you and exalt you and go home and sleep better at night than if they're given the normal disaster recovery manual from a bank or credit union or mortgage company that's 462 pages thick and has 500 scenarios in it, none of which have been tested successfully. So it's a very different world we're coming to from a management perspective, and these are the kinds of tools we need to be able to keep our boards happy. And keeping a board happy is one of our prime jobs as a C-suite executive.
Isn't that the truth? All right, well,
you
Wayne,
would know that, right?
I do know. I do know. Indeed, I've got a board meeting next week. I'm looking forward to it. All right, well, guys, that brings us to the end of today's webinar. Wayne, I want to thank you again for your time. It's always a pleasure to talk to you. And Carla, I think maybe you've got a winner for the Kindle.
Yep, so that winner today will be Rex, and congratulations. I will reach out to you later this afternoon for more information on that.
Fantastic. All right, Wayne. Well, thanks, mate, and looking forward to seeing you. We're going to get you out to the West Coast here one of these days. Sounds great. Happy to come. Good, good. All right. Well, thank you, everybody, and have a wonderful day. Take care, everyone. Bye-bye.